Hey, Trader Nerds, how are you? It is Sweet Bobby. Hoping you having a wonderful Friday. Oh, Fridays. We love them and we hate them because it's the last day of trading and we have to take 2 days off. Hopefully, before long, we'll be having trading 7 days a week. That would be awesome, wouldn't it? Can y'all hear my puppy yapping in the background? I apologize for him. He is a little bitty butt. So look at this, y'all. 5102. Will it hold? I don't know. But we are up 5.25% or 5 points. We're up 0.1%. Nobody is trading. Everybody is at the Hamptons. 2,400 contracts every 2 minutes. Are you kidding me? And the AD just took a tank. AD is at 183. VIX is at 13.87. But look at this, y'all. This is what I was talking about. This is some voodoo stuff here. Y'all, remember this chart we drew back on February the 1st, and it nailed the high right there. Look at that high, 5123.5. Our little 50% line was 5123.1. How does it work? How does it often identify these areas of support and resistance? I do not know, but it is amazing. Look at this. I mean, look at this, y'all. I drew this back on the 1st. This is on the 15th. Look at that. I mean, that's crazy. Look at this. Look at this. Look at this. Look, it's like it was around that area. I don't know how it works. I wish I knew how it works. But Blake Young, who designed the Big Green Mustard, deserves a round of applause from us trader nerds and probably a Nobel Peace Prize, or at least a Nobel Prize for economics, because that is amazing. So you should expect these to be levels of support and resistance. Where do we think that the market's going? Probably to fill this, But, ladies and gentlemen, if we hang here long enough, right, we know we're going to the 51.81. It is just a matter of time. And it looks that way similarly from the let's look at this. Y'all, look at this. I mean, there's nothing to see here. It goes to the up, it goes to the bottom, it goes to the center, stays in the center, goes to the bottom, goes back to the up. We are in a bull market. Do not fool yourself. So let's see how our little account's doing today. Let's do this one today. Let's do the not the mega IRA. Let's see, which one do I want to do? We want to do this one. The Bobby account here. Well, where's that? Bobby. There we go. So we are at 44,227. 44,227. Let's put that in. 44,227. Are you kidding me? Fire up the band, Rico. Y'all, we are up 5.24% on the year. And I know what you're saying. Yeah, but Bobby, the market itself, son, is up higher than that. Well, let's see what the market's up. The market's up 6.93. We're up 5.24, but I will take this any year because you know why? The market could easily be down 6.93 and we would still be up 5.24. Do you understand how good that works? That is what we are here for. We are here for 20% annual returns, and I think we can make them. So let's look at our Greeks and ratios today, see how our little account's doing. And we will have a Muscadine Mafia session after this, where we will look at the risk of the 112 versus our old friend, the 111. Some of you are actually doing the 111s instead of the 112s, and that's fine, but we'll look at the risk on them, kind of see what we're doing, because some of you have changed it up a little bit. So our Greeks and ratios are 49.53. Oh, look at that theta. 49.53. Are you kidding me? We are at 0.12. The VIX is at like 13.89 or so. So that looks good. And buying power usage is, let's see, $40,000. Nope, it's less than that because we got to go to our positions and we don't count Bill. So our little group here is 11,600. 11,600. All right, we're only using 26%. Y'all, we could use 50%. So what we're going to do today, though, because we are outperforming the market, y'all, we're well on our way. Let's see. Let's do the extrapolation. Today, let's see. Today is day what? Google. What day of the year is it? Of the year is it? So we are, what is the current day number? Here we go. Current day number, we are at day 54, right? So day 54. And if we are up 5.75%, make sure that was the number, 5.7, well, 5.24%. So we're up 5.24%, 24% in 54 days is nine per day times 365. If we were extrapolating out, we would be at 35.41%, baby. Now, let's see what we want to do here, because what I'm thinking is that we don't record all of our trades here, so it's kind of hard to say. But I think that I still want to do another tranche of the Black Swan Sweet Bobby hedge. I just really do. We're overperforming, y'all. So I'm going to use some of that money of these wonderful profits that we've got going on, right? And let's do a little bit of Black Swan hedge. Now, y'all, we're up. It says P&L year to date, 1879. Let's see what we're actually up. We're up $2,200 on the year. So I'm not sure that I want to do a full 4 tranches, but I do want to do at least one tranche of the when in good times, hedge. When things are going great, hedge. Hedge, hedge, hedge when things are going your way. Y'all, we've got the movement that we wanted. Look, we've got extraordinary returns. So don't be greedy and just put on a little bit, because this little market move up could be outdone, right? So what we want to do is put us just a little hedge in here today. So let's go trade ES. Let's go out and do us one. How about this 98 days? 98 looks really good. Anything above 60. Right. And let's sell something for $3. So here we go with 33.50s for $3. Let's try to get 310 out of it. And we're going to sell 3 of those. And see if we can get it filled. Nothing. Jack squat crap. Nothing. Where's my thing at? Hold on. Let's get this going. Here we go. $3. So let's see if we can replace that, make it less advantageous for it. So let's throw it for 305. Good. Now remember, you got to do your little thing here where you go control close position, close the full thing. And we want to close these when it gets down to 20% or 20 cents, I mean, and make it a GTC order. So we got filled for 305. Let's go to our little calculator. If we get filled for 305, let's say that's the price of our shorts. So what do we want to, we're going to harvest at 20 cents. What should our little things go for? So $1.63. So let's put them in for $1.60. And we're going to buy these for $1.60. 1.60. And we're going to buy 5 of them because that's this hedge. 3, 4, 5. And a GTC order. There we go. Now let's just say and make sure we haven't had any failed orders, because y'all in these up moves that we've been having, make sure that you're watching, because I got a lot of orders here, y'all. I mean, I got a lot of stuff that could fill here, right? And nothing's really close at the moment. Well, this 65 down to 20 is getting close. I still got 56 days in it, but make sure that you're looking at your filled orders and make sure, let's go 14 days, make sure anything hasn't failed. So we sold those today. That's a 112 that we did on Wednesday. We did 3 contracts. Wow, look at us. So nothing has failed as far as that goes. Now, so we sold those 3. And we are using 99.7% of our buying power. Wow, that's a lot. So I don't guess we'll do any bill. I think that's it. I don't really want to do a 112 today because I did one on Wednesday, and I've kind of got into the habit of doing my trades on the same day every week. So we've been trading this on Wednesday, but with the market up, I did want to put in a hedge. So that is call it the Sweet Bobby hedge, call it the Black Swan hedge, call it whatever you want to. Sweet Bobby hedge. And let's go through it really quick, like, so you guys know how to do it. The Sweet Bobby hedge is sell 3 puts around $3 at anywhere from 60 days forward, right? Then you buy. Actually, I was going to buy a full thing, wasn't I? I wasn't going to do the thing I was going to buy a full tranche. Okay, let's do that. Let's cancel that working order. And you buy 5 puts, 50 cents or 50 points below the shorts. So that's what I wanted to do. I wanted to buy it. I didn't want to put a GTC order in. So let's go back. So everybody understands how to do this, right? You sell 3 puts at $3. Where? 60 days or greater. If you're first starting out, I do 120 days. 90 days is a great place to do them. And then buy 5 puts below that for whatever. So let's cancel that order. I did it wrong because I was like, hey, our newfound fortune, we've made all kind of money. We're up $2,000 today. We're up $46,000 on the year. Let us use some of our great little gains to, here we go. So I'm going to change this one, the one that I just put in. Let's cancel what, baby? You can call her. I don't care. Oh, what was that beeping? Oh, you unplugged that. All right, so let's go and make this today. So at $3, let's try to get it at $2.90. Buy those 5. All right, it's working. So let's go back to activity. Let's move it up to $2.95. Bingo, baby. We are in. So I still got this here. So we bought a full 1 tranche of the Black Swan hedge. How much did it cost me? It probably cost me about $250, right? That's about a $250 investment. Okay, well, why would you spend $250 when you don't have to? Well, because it's a hedge. And remember, look how we're doing. I mean, let's go back. We're up $2,200. I have made $617 just from Wednesday, y'all. Don't be greedy. Use $200 of that to buy a hedge. That's all we're doing. All right. In good times, hedge. In good times, hedge. Because in bad times, it's too late to hedge. That is our session. I will see y'all in Muscadine Mafia.